Hello, welcome back to Boni's Life, your sanctuary for the most incisive and unfiltered analysis of the crypto universe. If you're tired of the mainstream narratives, the clickbait headlines, and the so-called experts who are always a day late and a dollar short, then you've come to the right place. Today, we are continuing our deep dive into the pivotal moments of 2025, and we have arrived at a month that didn't just move the needle, it broke the entire seismograph. I'm talking about July 2025, a month that will be etched in the annals of crypto history as a period of profound and irreversible transformation. If you thought the first half of the year was a wild ride, July was the month the entire financial landscape was redrawn, and the aftershocks are still being felt today. In this episode, we will dissect the anatomy of this market-altering month. We will explore the tectonic shifts in power and influence, and as always, we will arm you with the kind of advanced insights that you simply won't find anywhere else. We will also hold ourselves accountable by revisiting our own projections from July and seeing how they've weathered the storm of reality. And for those of you who have been with us on this journey, we will quantify the incredible opportunities that were seized and the pitfalls that were avoided by calculating the returns on a hypothetical $100 investment. So I urge you to eliminate all distractions because for the next 30 minutes, we are going to embark on an intellectual expedition into the heart of the crypto tsunami of July 2025. This is not just a recap. This is a masterclass in understanding the future of finance. To truly comprehend the magnitude of what transpired in July 2025, we must first zoom out and survey the broader financial landscape. It was a tale of two markets, a fascinating dichotomy that underscored the growing divergence between the old world of traditional finance and the new frontier of digital assets. On one hand, you had the legacy markets, the S&P 500 and the Nasdaq, soaring to unprecedented heights, seemingly oblivious to the undercurrents of economic uncertainty. This rally was largely fueled by a potent cocktail of stellar corporate earnings, particularly in the tech sector, and a pervasive sense of euphoria surrounding the advancements in artificial intelligence. It was a classic risk-on environment where investors were chasing returns with an almost reckless abandon. But beneath this veneer of bullishness, the crypto market was telling a far more nuanced and, frankly, a far more interesting story. It was a story of a changing of the guard, of a new contender emerging to challenge the long-held supremacy of Bitcoin. While Bitcoin, the grizzled veteran and undisputed king of crypto, posted a respectable 10% gain in July, its performance was dwarfed by the explosive face-melting rally of Ethereum, which surged by an eye-watering 53%. This was not a mere market fluctuation, it was a fundamental paradigm shift, a clear and unequivocal signal that the smart contract behemoth was no longer content to play second fiddle. It was a declaration of intent, a statement that the future of finance would be built on its rails. The institutional capital that had been cautiously dipping its toes in the crypto waters was now diving in headfirst, and their destination of choice was overwhelmingly Ethereum. So, what was the secret sauce behind Ethereum's incredible 53% surge? It wasn't a single ingredient, but rather a masterfully crafted recipe, a perfect confluence of institutional hunger, technological evolution, and a macroeconomic tailwind that created the perfect storm for a price explosion. The primary engine of this rally was, without a doubt, the unprecedented deluge of institutional capital into spot Ethereum ETFs. In July alone, these investment vehicles became a black hole for capital, sucking in a staggering $5.4 billion in net inflows. To truly grasp the significance of this figure, you have to understand that it's more than all the previous months of inflows combined since the inception of these ETFs. The monthly inflow growth for ETH ETFs was a staggering 366%, a figure that makes the already impressive 33% growth in Bitcoin ETFs look like a rounding error. This wasn't just a case of institutions diversifying their crypto holdings, it was a strategic and decisive pivot towards Ethereum. The assets under management AUM of ETH ETFs ballooned by 120% in July, a clear and irrefutable signal that the so-called smart money was not just placing a bet, but was making a long-term strategic allocation to the future of decentralized finance, a future that they believe will be built on Ethereum. This institutional gold rush was further amplified by a paradigm shift in corporate treasury management. We saw a growing number of publicly traded companies adding Ethereum to their balance sheets, not just as a speculative asset, but as a productive capital asset. This is a crucial distinction. Unlike Bitcoin, which is often viewed as a digital store of value, Ethereum's staking mechanism allows it to generate yield, making it a far more attractive proposition for corporate treasurers seeking to optimize their returns in a low-yield world. This evolution of corporate treasury strategy, from a purely defensive posture to a more opportunistic and yield-seeking approach, was a major validation of Ethereum's long-term value proposition. As I always say on this channel, the crypto market is not an island. It is a continent, inextricably linked to the global mainland of economics and politics. And July 2025 was a masterclass in this interconnectedness. The G20 finance ministers and central bank governors convened in Durban, South Africa, and the mood was one of cautious apprehension. The official communique spoke of slowing global growth, of persistent inflationary pressures, and of the need for fiscal prudence. But reading between the lines, the message was clear. The global economic engine was sputtering, and the central banks were running out of road. While the US and European economies were putting on a brave face, propped up by resilient consumer spending, the underlying fragility of the system was palpable. This environment of macroeconomic uncertainty paradoxically created a fertile ground for crypto. As faith in traditional financial institutions wavered, investors began to look for alternatives, for assets that were not subject to the whims of central bankers and politicians. And crypto, with its decentralized and permissionless nature, was the natural beneficiary of this crisis of confidence. But the most significant global event of July 2025 was not an economic summit, but a piece of legislation. In the United States, the introduction of the Genius Act sent a seismic shockwave through the regulatory landscape. This was not just another half-baked attempt to regulate crypto. It was a comprehensive and forward-thinking piece of legislation that aimed to provide a clear and unambiguous framework for USD-pegged stablecoins. But the Genius Act went even further, with provisions to actively promote the inclusion of cryptocurrencies in retirement accounts. This was a watershed moment, a clear signal from the world's largest economy that crypto was not just here to stay, but was a legitimate and valuable component of a diversified investment portfolio. The impact of this regulatory clarity cannot be overstated. It was a green light for institutional investors who had been waiting on the sidelines, and it provided the legal certainty needed for mainstream adoption to accelerate. Meanwhile, across the Atlantic, the European Union was watching these developments with a mixture of admiration and anxiety. The EU was growing increasingly concerned about the dominance of US dollar-denominated stablecoins and the potential for this to undermine its own monetary sovereignty. This led to a flurry of activity in Brussels as the EU scrambled to develop its own regulatory framework for digital assets, a framework that would both foster innovation and protect its own financial interests. These regulatory chess moves, while complex and at times contradictory, were ultimately a massive validation of the crypto space. They were a tacit admission from the world's leading economic powers that crypto was no longer a niche interest for tech enthusiasts, but a powerful and disruptive force that could no longer be ignored. Now, for all you chart warriors and technical purists out there, let's descend into the digital trenches and analyze the price action. July 2025 was a month that will be studied by technical analysts for years to come, a textbook case of a paradigm-shifting breakout. The most significant event on the Ethereum chart was the formation of a golden cross on July 1st. For those of you who are new to technical analysis, a golden cross occurs when a shorter-term moving average, in this case, the 50-day, crosses above a longer-term moving average, the 200-day. This is one of the most powerful and reliable bullish signals in the technical analyst's toolkit, and it often heralds the beginning of a new and sustained uptrend. And that is precisely what we saw. The Golden Cross was the starting gun for a spectacular rally that saw Ethereum's price surge by over 50% in a matter of weeks. But the bullish signals didn't stop there. The Relative Strength Index, RSI, a momentum oscillator that measures the speed and change of price movements, broke through several key resistance levels, indicating that the buying pressure was far from exhausted. A bullish crossover on the MACD moving average convergence divergence indicator, another widely used momentum indicator, provided further confirmation of the upward trend. Of course, no rally moves in a straight line, and we did see the RSI enter overbought territory mid-month. This is a signal that the asset may be due for a short-term pullback or consolidation. And we did see a brief period of sideways price action as the market digested its recent gains. But this consolidation was healthy and ultimately constructive. It allowed the market to build a new base of support before the next leg up. Key support levels were established around the $3,500 mark, a level that was previously a major resistance zone. This is a classic technical pattern known as a role reversal, where old resistance becomes new support, and it is a very bullish sign. On the upside, resistance was established near $3,800. The breakout above this level towards the end of the month was the final confirmation that the bulls were in complete control, and it opened the door for a move towards the psychologically important $4,000 level and beyond. What made this technical setup so powerful was that it was not happening in isolation. It was perfectly synchronized with the fundamental catalysts that we have already discussed: the flood of institutional capital, the improving regulatory landscape, and the growing adoption of Ethereum as a corporate treasury asset. When you have this kind of perfect alignment between the fundamentals and the technicals, it creates a powerful and self-reinforcing feedback loop, a feedback loop that can lead to the kind of explosive price action that we saw in July 2025. Now let's bring this analysis down from the 30,000-foot view and into the realm of tangible results, because at the end of the day, the question that matters most to every investor is, what does this mean for my portfolio? So let's run a simulation. Let's imagine that on July 1st, 2025, you had $100 to invest. You've been watching Boni's live, you've been absorbing our analysis, and you're ready to make a move. If you had chosen to allocate that $100 to Bitcoin, the legacy asset, the digital gold, you would have seen a respectable return. By the end of the month, your $100 would have grown to approximately $110, a 10% gain. In the world of traditional finance, a 10% return in a single month is nothing to scoff at. It's a solid, respectable performance. But in the high-octane world of crypto, and particularly in the context of July 2025, it was a story of missed opportunity. Because if you had followed our deeper analysis, if you had understood the tectonic shifts that were taking place, you would have seen that the real opportunity was not in Bitcoin, but in Ethereum. A $100 investment in Ethereum on July 1st would have yielded a truly staggering result. By the end of the month, your $100 would have transformed into approximately $153, a massive 53% return. That's more than 5 times the return of Bitcoin. And it's a testament to the power of alpha, the power of generating returns that are not just a function of the overall market, but of superior insight and analysis. This is not just about picking winners and losers. It's about understanding the very fabric of the market, about identifying the assets with the most powerful narratives, the most compelling fundamentals, and the most explosive technical setups. It's about moving beyond the simplistic buy Bitcoin mantra and embracing a more sophisticated and nuanced approach to crypto investing. The lesson of July 2025 is clear. In the world of digital assets, the spoils don't go to the passive investor. They go to the informed, the diligent, and the intellectually curious. And so, we close the chapter on July 2025, a month that will forever be remembered as the moment Ethereum stepped out of the shadows and into the blinding light of institutional acceptance. It was a month where the theoretical potential of smart contracts and decentralized finance collided with the hard reality of multi-billion-dollar capital flows, creating a perfect storm of price appreciation. The institutional floodgates didn't just open, they were blown off their hinges. The regulatory fog that had been shrouding the crypto space for years began to dissipate, replaced by the first rays of legislative clarity. And through it all, the Ethereum network, the digital bedrock of this new financial ecosystem, continued to evolve, to improve, and to scale at a relentless pace. Looking back at our own projections from July, we were undeniably bullish on Ethereum. Our analysis had identified the confluence of catalysts that were brewing, and we had urged our viewers to pay close attention. But even we were taken aback by the sheer ferocity of the rally. Our models had pointed to a breakout, but the magnitude of the move, the sheer verticality of the price action, exceeded even our most optimistic scenarios. It's a humbling reminder that in the world of crypto, you have to be prepared for anything, and that even the most well-reasoned analysis can be dwarfed by the raw, untamed power of the market. As we cast our gaze towards the horizon, as we try to discern the shape of things to come, the central question is one of sustainability. Can this institutional love affair with Ethereum continue? Will the regulatory tailwinds that propelled the market in July continue to blow? And what new game-changing innovations will emerge from the crucible of the Ethereum ecosystem? These are the questions that will define the next chapter of the crypto revolution. And you can be sure that we will be here on the front lines to guide you through the complexities and the opportunities that lie ahead. This is not just about making money, it's about being part of a technological and financial revolution that is reshaping the world as we know it. Thank you for joining us on this intellectual journey. Don't forget to like, subscribe, and engage in the comments below. Let us know your thoughts on the Ethereum breakout and what you think the future holds. Until next time, stay informed, stay vigilant, and never stop questioning the consensus.